AI is not going to replace you. Somebody that is using AI will. Satya Nadella came out and basically said, SaaS is dead. The form factor that we're dealing with technology is likely to end up changing, but humans are incredibly creative at figuring out more stuff to do. I can say with certainty that we are definitely going to have a bubble and burst. Any form of defensiveness, to me, is a red flag, because defensiveness indicates a rigidity. You have to inspire people to work at wages that are below market. The startups are paying people below market, and you have to, the only way that you can accomplish that is by rallying the troops around the mission.
Curiosity is the key to the imagination.
I Kevin Podcast, let's do this!
Dream the impossible dream. Welcome to Mike Helfman's Curiosity Podcast.
It's good. It's only fitting that we've got Mr. Kevin Brockland in the house, because he was my first interview of the year, and now he's going to be the last interview of the year.
All right.
Yeah, because we first did a podcast back in January 2025.
Yeah.
And we did that talk for ARC Spaces. That was the first thing I actually posted online.
Okay.
So now, good way to wrap it up.
It's a fitting full circle.
Yeah, it comes full around. So what's going on, man? How's it been? Okay?
It's been a busy year, lots of travel. This is the longest I've been in one spot in KO for a while, as the year is winding down. So no more travel through the end of the year. I get to have my own room, my own bed.
I know. I'm grateful that we got you, that you were able to carve some time out for us.
Yeah. It's a relative rarity to be in KO.
So we can hear the wisdom of the Irish Viking.
I should have grown my beard out for it then.
Yeah, Ruth would say the Viking philosopher, but it's all good. So I got a lot of shit that I want to ask you about, because you've been hitting the whole region harder than anybody else I know this year, looking for investments and looking at smaller companies that are being built and that are growing. So how is Southeast Asia? How is the Southeast Asian market? How does it compare to the rest of the world? Is it the most underestimated startup market?
I think it's definitely underestimated. I don't think that it gets a sufficient enough attention. And there's a handful of reasons. Part of it is that it got attention, but it got attention for the wrong reasons. And so what happened, if you look at the history of early stage and venture, we saw a lot of the wrong strategies being applied, and ultimately those didn't pan out. So it ends up creating a sort of burned on that market sentiment.
What were those wrong strategies?
I mean, they over-indexed on the consumer economy, where Southeast Asia is very fragmented. It's a collection of countries that speak different languages. Sure, it's a collective region, but it's not a homogenous consumer market. And so even during that time period, most of the capital started concentrating around Indonesia as well, which it went after the high population market. But it never really de-aggregated a lot of the statistics, because it argued the 300 million population, you have the large population numbers, all of that. But if you actually went and did the math on segmenting it down to who the consumers are, how many actual consuming households have the discretionary income to even buy some of this consumer technology that was being put out there, whether it was D2C brands, whether it was e-commerce or et cetera, a lot of the math just didn't work out. And really much of it was just centered around the urban centers. And Jakarta ended up becoming the number one biggest city at 40-something million population. But if you segment that down on the consuming households, it's still fairly small. And the high valuations and the over exuberance, it was just too much into bubble territory. So there was just a wrong strategy applied for the region.
Okay.
Whereas these are mostly trade economies. There's a lot of enterprise, there's a lot of manufacturing, there's a lot of services, there's a lot of export economies. And so it would have been better suited to, sure, you can play the consumer, but you have to understand that those are a little bit smaller, country specific. It's very difficult to go regional with many of them. But on the B2B side, there's a lot more opportunity. So it's certainly underestimated, and a lot of the players that came in, as well as the local high net worths and institutions, as well as the foreign, they just ended up jumping onto the hype train and ended up getting burned. Now it's a matter of trying to lure them back in But there is a lot of opportunity in Southeast Asia. It's still undersaturated.
Yeah, well, Southeast Asia is fragmented in itself, that it has many different cultures throughout the region, many different regulations and regulatory environments, but Indonesia itself is fragmented
Yeah.
as a country.
I mean,
right?
across the islands that it consists of.
Different cultures, different, huge difference in economy, right? From Jakarta to like Papua. I mean,
Yeah.
it doesn't get much more of a stark
even
difference.
sticking in the same island of Java to go between Jakarta and Surabaya or to Yogyakarta.
Right.
Still very different economies, very different stages of development.
All right, so you know, that being said, like with the difference in the market now, would a company like Grab or Gojek even get founded in this type of environment?
I think that you would not have as much capital ready to fund them presently. Because that level of capital availability is just not the same as it was during the time period that they were coming up. And the willingness in order to fund sort of the land grab growth at all cost style of businesses isn't as present today as it was then. At that point in time, it was just kind of like, it was still very early. We didn't have a lot of tech companies at that point in time. So the copycat style business model of let's do the Uber of Southeast Asia, or let's do the Amazon of Southeast Asia. So that was when the days of like Rocket Internet came in and launched a lot of the brands that we know today, Food Panda, Zalora, not Shopee, Lazada.
Okay.
A lot of those came out during that time period. We're past really the sort of like sheer copycat of let's build the X of Southeast Asia.
Yeah, but now we're kind of like in a different realm, right?
It's
Now we're in the
maturing
AI
now.
realm, though. So
Sure.
that kind of thing, I'm sure you're probably seeing in the AI segment.
Absolutely, but I don't think we can necessarily come around and say build the OpenAI of Southeast Asia.
They're trying. I mean, like,
I mean, there's a number of local language LLMs,
right.
but that starts getting more into national politics as opposed to true functionality. There's a bit of it in regards to, if we start thinking in regards to like voice AI, more realistic interaction via chat, there's a lot of nuance that the generic models aren't going to get in regards to accents, mannerisms, etc. Where if you take Malaysia as an example, there's a lot of blend of languages to where in the exact same sentence, you may end up hearing a person use Malay language, English language, maybe dropping a Cantonese phrase or a Hokkien phrase or some of the Chinese dialect phrases all mixed in with the same sentence. And then you get the aspect of the people around the different states. You have Kelantanese, you have Sabahan, you have all of this different variety of accents, word usage. That is not going to get captured by
OpenAI.
because there's not enough
They can't.
leverage in it. It's not scale enough for them to care about.
So you think we're going to see hyper-local AI then?
I think you're going to end up seeing players that fill that gap, and then you're going to end up seeing them become kind of like essentially like an API that will link up to the other players. So
Right.
you may see a broadening of the horizontal layer where I'm facilitating voice customer service, but then I'll plug into the local language LLMs that will help me facilitate those accent usage, language nuances.
Yeah, I could see that. So, all right. So earlier you were saying that basically the global market overestimated the consumer power of Southeast Asia, and a lot of that money flooded out. And now people are focusing more on B2B, which I know is your speciality. So, what industries are you seeing the most promise in the B2B in Southeast Asia, Malaysia, Singapore?
To be honest with you, it's across the board, if I'm being perfectly honest with you, because if you look at the level of digitalization of enterprise across Southeast Asia, it's still very, very low.
Okay.
Now, the parts that interest me more, I find it very hard to target the micro and small enterprises just because the challenge of customer acquisition is still too challenging in order to make it cost effective. So the ones that I find more interesting are the ones that are going after the larger size enterprises that have the ability to pay larger subscription fees. And many of them are still very low on the digitalization. So you've got a lot of room in regards to talking about HR, whether it's the talent acquisition, the HR and hiring process, whether you're talking about factory automation, not even getting into robotics, but that's another area that's potential outside of we're relatively low capex, so we don't necessarily deal in that.
Right.
But you'll see other areas of how to drive more efficiencies. You'll see more areas in regards to improving procurement, cross-border exporting, importing. You'll see things across the board.
Do you invest in any brick and mortar, or is it purely tech companies?
Purely tech companies. In a prior fund, we did one physical goods company, but it was an innovative advanced materials company where they were using biomaterials for composites that you see on cars, planes, trains, drones, anything within the transportation sector.
So it was still
an
a tech
up-and-coming
company.
area.
It was still kind of a tech
I mean, it's
company.
advanced materials, so it's
Right.
and it had an interesting story. It has a very interesting story because it can use a lot of bio waste. It's not single product based, so many of the players will be using solely one input material, like a flax or hemp, whereas they're more capable of using a variety of whatever the bio waste in that particular region, country, etc. actually is.
So the other day we were talking about how much travel you've been doing over the last year, and I know it's like super platinum, right? But how many miles have you been able to calculate? Like how many miles you've traveled over the course of the years?
So I didn't do the calculation on the number of miles, but I did earn the platinum status 1.5 times over.
So that's got to be like 150,000 miles or something.
It's a lot of regional. It's a lot of regional travel. So like I'll hop over to from KL to Bangkok probably once a month. I started going to Manila basically once a month. I'm in Singapore on a regular basis as well. So a lot of mine is just kind of like short distance, high frequency.
But quite a few Japanese trips too, right?
I did go to Japan maybe 3 or 4 times.
Yeah.
Yeah.
All right, so let's say you've traveled 150,000 miles this year, scouring businesses across the Asian region. Now, what businesses are you seeing being overbuilt, and what businesses are you seeing that lack in the market?
So it's funny because I did my 2025 wrap-up newsletter to some of our investors, and one of the themes that I highlighted was that 2025, from a pipeline deal sourcing standpoint, I found to be rather lackluster. And I say that in regards to not quantity, but perception of quality. Not to denigrate the founders themselves, because I found really interesting founders. The challenge that I've found this year is the newness effect of AI. And so most of the startups that I've seen, I would categorize as the first wave of AI startups. And in that, they kind of fall into one of 2 buckets for the most part. We have the existing products or services that just tried to glue AI on top of it, and call it a job done because they felt that they had to. It was now like a necessity that they had to figure out some way to glue it together. And oftentimes it just didn't work so well. And then the second type was AI first, but only scratching the surface. So it didn't really get the depth that I was looking for or that I was hoping to see. And in both scenarios, because we come in very, very early, the product that we're investing in is not the product that it will become. So oftentimes we're investing in the individuals and the vision that they have. And I found that in this first wave, the vision was also a little too shallow for what I was looking for. There was too much uncertainty and not enough conviction with a viewpoint on where the direction of the pathways of the development of the technology is going to lead, and how they're going to position themselves in order to maximize and take advantage of this trend. Towards the tail end of this year, we started seeing that first wave give way to the second wave. So I'm becoming much more optimistic as I've started to see an increase in, call it conviction or competence, or however we may end up calling it, that the founders just seem to have a better sense of how to create AI products, how to incorporate AI in their processes for building, getting speed, and thinking more clearly about it. And I feel like the vision that they have, now that a lot of the dust has settled, maybe because the pace of innovation, the difference between models that come out, now that Gemini V3 came out just recently,
Free.
that the pace is now kind of becoming more understood, that the vision that many of the founders are having is getting more depth and more analytical and more positioned around a conviction of how this translates into them taking advantage of a longer term opportunity, as opposed to just, I could make revenue today.
Right, right. So, okay, because that was a big problem with startups. Previously, startups were making no revenue, and they were getting a lot of investment, and then I think a lot of people got burned, so the shift kind of changed where people wanted to find investments that they can get immediate revenue and immediate profit, and I think AI was like a great driver of that, but how long is that going to last? So now you're saying it's going back to a longer term vision rather than immediate profits?
I mean, there's always the aspect of, if you're selling a product, you need to have some sort of immediacy of value proposition. My aspect was not necessarily, is the business good today? It's that they needed to have a vision and an understanding of how they will still exist, and how they anticipate that pathway of development.
Yeah.
Because, you know, if somebody just tells me that they can make money today, that's all well and good. But if you're operating in an industry that is ripe for change, and it's a high-paced, rapidly altering environment, if you don't have a viewpoint around what tomorrow is, it's hard for me to get a lot of faith in making a very long-term bet on you. Because VC is, the time horizon ends up being 5 to 8 years that I may hold an investment. That's a lot of time. Whereas if I was just trying to do a short-term sort of cash in, cash out, it'd be a completely different calculus.
Yeah. I think, you know, we were talking earlier, me and the team, about the AI bubble and the potential of an AI bubble and what could happen when the AI bubble eventually bursts. And I think those are going to be some of the major casualties of the AI bubble popping, are going to be these short-term thinkers making quick money immediately and not being able to rapidly change with the wave of AI that's just going to continue to crest. And yes, at some point it will crash, and the money will stop flowing out because valuations are going to be overcooked. And at that point, I think a lot of these companies are either going to get bought out or they're going to go out of business.
Yep.
And then we're going to see a consolidation of gigantic companies like probably Google, Microsoft, perhaps OpenAI, anything Elon Musk is in. And then we will eventually see some new major players come out of businesses that don't exist yet, of this new tech era.
I think absolutely. I mean, the thing that every existing technology company that is out there should be scared, and I say that provocatively, but I do really mean it. That the big challenge that is happening right now is that the time to copy is becoming very, very short. Because of all of the tools, people can build faster and build better at a rate that previously was unheard of. So you had an inherent competitive moats for a lot of technology and a lot of SaaS, simply because it was hard to build. If everything becomes easier to build and quicker to build, that barrier, that competitive differentiation, that competitive moat starts to erode and disappear. And so inherently, you see a lot of companies where their growth rates start to stall. And many of them that you see when you get past the Mag 7 in the public markets, you'll start to see many of the SaaS companies that are out there are going to start seeing their growth rates slowing. There's going to be a new generation of AI-driven companies that are going to start peeling a lot of that off. And so there's still a lot of speculation of what does this mean and where's the more fragile territory. But essentially, there was an interview where Satya Nadella came out and basically said, it was a very sort of doom and gloom, and was much more provocative than the way that I'm putting it. But he said SaaS is dead.
Right.
Because essentially what AI enables is that if you're just an interface on a database, the form factor that we're dealing with technology is likely to end up changing. If you think about using OpenAI or Gemini, it's prompt-based. Now we're having a conversation, we're having a chat. We're no longer navigating an e-commerce site in the same way. We're no longer navigating Google search results in the same way. A lot of that is just going to continue. So the form factor is still kind of a question mark of how it's going to settle. It's likely to become multimodal. The voice AI is becoming very big. We're investing in a company that's doing voice agents that's basically an executive assistant for everybody. Much of it being controlled by voice to where for many people, they may not necessarily need to even open their laptop anymore.
Yeah, I feel like everybody uses voice with AI now because it is a conversational mode. It can understand you in a conversational way. So why not use voice? You can output a lot more faster and clearer with voice.
Absolutely, and it's a very familiar when you can control the tone, the manner, and be able to alter the parameters around it. It's a very familiar way in order to have that exchange, and it builds in with the way that we're already essentially wired, because you're just asking questions and getting answers and drilling down without having to do the reading or otherwise. So if you're on the go, if you're in the car, in your commute, it's a very natural, easy way. It may not fit for if I'm on the MRT or if I'm on public transportation, because I don't want everyone getting annoyed by me having a loud exchange.
Right, that's true. But thinking about AI and how it works, right? I mean, we say that AI it's a double-edged sword, right? It can be used for good, it can be used for bad. Some people can be taken over by it. Nobody wants to be taken over by AI. But I figure, like, if you can treat AI as an employee, as somebody who works for you or works with you for at least 51% of the time, then you're still in charge, right? And for that other 49% of the time, you can use it for guidance and wisdom and helping with decision making. Then at least you're still in charge of it rather than it being in charge of you.
Yeah, I mean, I can't remember who gets credited with this saying, but there was somebody that came out and said, AI is not going to replace you. Somebody that is using AI will. And I think that is very striking, because AI is essentially a probabilistic model. So I think there's still a lot of the creative thinking and problem solving that it just can't presently do. Maybe at some point in the future it improves at that. But where we're at right now is we really need the human in the loop that is able to leverage on that so that we're getting that efficiency and productivity gain. Humans are incredibly capable at figuring out more work to do. So if we look at every technological revolution, we became more productive. Even if you start talking about going all the way back to like printing press era, or if you talk about the dawn of the PC, or the introduction of the internet era, or the moment that Google search where every information was all at your hands, people at every single stage were calling for the extinction of work as we know it. But humans are incredibly creative at figuring out more stuff to do.
Yeah, we invent jobs, and the more money that gets put into the market, the more jobs will be there. I mean, we were talking about this again. I'm going to go back to India, right? Like, there's obviously a huge wealth gap in India, and if you go to India, you can get a person to do just about anything, right? We were talking about delivery. You can get anything delivered in 10 minutes.
Instant delivery works better because it's cheap labor.
Right, but not only that, you can also get, you could have somebody massaging your feet, somebody cooking for you, somebody giving you a pedicure, somebody feeding you, all at the same time. Right? I mean, these aren't jobs that exist in the Western world currently, right? But they could, and those people that might be, standing by your side, who's your bodyman, they might get paid $150,000 a year. I think there's going to be a big economy in human-to-human services that's going to be like high-paying jobs, right? Like I saw something the other day about a wealthy guy who has a house manager, somebody who takes care of all of his credit cards, takes care of, when subscriptions expire, going to the pharmacy, everything, right? Yeah, you could say AI is going to automate that, and it might, but
automated for that person. Now that person can do significantly more.
Right. Now that person will be able to do more things. So you're right. So, all right, getting back to this AI bubble and getting back to, first of all, how much room do you think is there to run in this AI cycle right now? I mean, we've seen, look, AI has been available to the public for 3 years, and it's been on a very, very strong run for those 3 years. How much time do you think we have left before this bubble pops?
So I can't necessarily predict the when. I can say with certainty that we are definitely going to have a bubble and burst. because that just is the nature of the pendulum swinging. It always ends up working out that way. The degree and the severity is still a question mark. It does make me a little bit worried, the amount of off-balance sheet interlinking between some of the big players and the quantum of money that is there. So that's a little bit worrying in regards to getting to that was the entire thing of the great financial crisis in 2008, is that there was, for a market like mortgages that was very localized, because of the securitization, it created more interconnectedness, which created more fragility. So if we start seeing too much of that, we could end up seeing a greater severity.
So we're saying in this case that the chips, the GPUs, are essentially like the mortgages.
So I think that the intercompany financing arrangements are more of those, whereas the houses still are physical infrastructure. So that's perfectly fine. It exists. The chips, there's going to be a continued increase in demand. It's to be determined in regards to what the cycle time in replacing old versions with new versions, because there is the economics around how much investment went into something versus how much revenue can be made off of it before you come to the next cycle. That's been the argument on the foundational models, that the amount of money that you spend on creating it, it's getting replaced before you paid back that capital.
That's something that's been said about CoreWeave, for example, right? They're super leveraged, and who knows how long these chips can last. Are they going to get 8 years out of them? 5 years?
That's the big question mark. But inevitably, like if you look at, let's take cloud for an example, because that's a good proxy, because everything ends up having to be focused on data centers and these chips anyways, and cloud is a good proxy for it. The amount of companies that are actually deployed on cloud is still very low. It's less than half. And depending upon which geography you're talking about, it could be in the teens. So if you're talking about Southeast Asia, it's very, very low. It's getting further along, but you have a lot of like on-prem, old-style infrastructure, old server racks sitting in corporate buildings, and a lot of that is still in transition. So now we start talking about AI, it's still in its infancy. So if we look at the relative market size, and again, there's a chance that the market will expand beyond what we actually thought about. So if we take like an Uber example, historically when people were trying to do the market share analysis on that, they were just looking at the taxis. What ended up happening is that the market actually ended up expanding, because it wasn't just the size of the taxi market. Now it was I just don't want to drive anymore, or now there's more access. The market actually expanded.
Well, there's also food delivery.
There's also food delivery. It expanded that TAM across a variety of factors. And I think in general, we're going to see a similar aspect with AI, because we're going to see new initiatives. We're going to see the introduction of humanoid robots. That'll be an entirely new era of physical blending with AI. We're going to have domestic help. We're going to have in the agricultural industry. We're going to start seeing that over. What's the timeline? It's obviously going to be pushed out.
So that's
market
the
size, and the size of the market for chips inherently is just going to be massive.
So that's what I'm wondering. Maybe the first cycle of AI, if the bubble pops, maybe it pops before humanoids really get embedded in the market, and then humanoids are what take us through this whole second cycle.
I mean, if you look at the internet bubble at the end of the 90s,
right.
It's the same thing. We saw a lot of business ideas come up where the economics at that time didn't make sense. So like a online site to find a dog walker didn't make sense in 1998. But you know what? There's a business that exists now doing that exact thing, and they're doing very well. Right. So like it burst at that time period. Because there was an over-exuberance on what the capabilities at that point in time were, but ultimately, in the long run, the future got pulled together, and it became the reality. So a lot of it is just kind of comes back to this kind of cliche saying in startups that you're either in early stage, in innovation, you're either too early or you're way too early. And a lot of the bubble comes around funding the way too early, because it is really exciting. It is really interesting.
Hyperloop.
And sometimes we're trying to, we can impact the timeline where we can pull the future forward with enough capital. And that was part of the logic of like how much money flooded into e-hailing and all of those sort of businesses, is that it actually pulled the future forward. Adoption became sooner rather than if it would have followed the natural course.
Yeah, and that's what's also happening with AI, and hence the fact that regulatory commissions can't keep up with the innovation rate.
Yeah.
And that happened with Uber too. Same thing. There was a huge war with the taxi companies.
Inevitably, innovation's going to move faster.
Yeah, they were operating unlicensed. Right. Exactly. Okay, so that being said, then what do you think? I know you're not a magic genie here, but what do you think are the super companies of tomorrow? Like right now, we've got the Magnificent Seven.
Yeah.
What do you think the super companies are of tomorrow?
I mean, we're still going to see those players in it because they're all transitioning into foundational models. The funny thing is like if you look at the history, the turnover in the top companies in the S&P or Nasdaq or whatever, there's been a higher attrition rate, meaning that they get replaced by the innovators. It wasn't so that it was filled with the Magnificent Seven. These are all tech companies that have now usurped the prior generation. It used to be like steel and automotive and banking and traditional sort of like hard industries. But these days, these tech companies are students of history as well. So many of them are taking the lessons of the past, not becoming like the Kodak case story, and innovating on the future. So Google is investing very heavily in AI. I think the prior, early in the days of AI, people were calling that Google was basically on the decline. But I mean,
they've caught up very quickly.
I mean, most of the researchers that are all of the other companies came out of Google DeepMind in the first place. Like they were the source of.
Well, they were supposed to be at the head from the beginning. I mean, Google was essentially AI. I remember watching a talk with Eric Schmidt like 15 years ago, and he said, we're seeing people asking us what they should do. What movie should I watch?
Yeah.
You know, and that was kind of, I feel like, the source of generative AI. And then they kind of dropped the ball, and we did get a new super company out of all this, which is OpenAI.
Of course, yeah. We did end up getting that. So we will see players like that come up. Anthropic is another player that's come up and risen. Mistral, we'll see a number of these other AI companies that are out there.
SpaceX is going to be one. I think the space economy is probably going to be some pretty super companies.
At some point, I imagine SpaceX, Starlink, Tesla, there's like a convergence of a lot of the businesses that he's in because they're all centering around very similar themes. But I think in general, it's hard to say what the crystal ball will hold, but because I think that the innovation that's going to end up who the top players of tomorrow are really depends upon whether or not the big players of today stay innovative. And you know what the reason why Google fell behind initially, or was perceived to fall behind, is because they got too complacent. They started acting like a big company as opposed to having the. I mean, it was like you had on-site massage therapists.
Right.
You had people that were just like taking 2 jobs and phoning it in and still getting paid $500,000 or whatever it was. Like there was like all the crazy stories there. But then they basically like calmed things down and said, we got to get back to being competitive. Otherwise, like all of the AI is there in order to kill the cash cow, which is their search advertising business. That is the main revenue generator. At some point, they need to figure out a new manner because ultimately that is still going to be at threat because AI is essentially an answer engine, which is going to operate under a different monetization methodology. So we'll have to see how they end up getting sorted out. But if you're going to bet on somebody, OpenAI has to go out and raise money. Google is printing money.
Yeah.
Like they're kicking off like what, like $100+ billion every like.
Well, I think the AI war has kind of started with Google and OpenAI. I mean, Google is essentially trying to kill OpenAI by making Gem 3 free. And to get the same capabilities of OpenAI, you have to charge for it, and they don't really have any other streams of revenue. But now you see OpenAI made a huge business deal with Disney for character rights, for content licensing.
That's an interesting one.
Yeah, for Sora particularly. I think that's going to be for video generation. You know, I mean,
fan fiction.
Yeah, you're going to be able to
soon.
see yourself in Star Wars. Right.
Yeah.
That kind of reminds me. If you read the book, Ernest Cline's book, Ready Player One, there was a scene in the book where he was in a VR world and he was Matthew Broderick in that movie. I can't remember what movie it was, but he was essentially the character in the film.
Yeah.
And that's very much of what this deal reminds me of. You are a Jedi in the film.
Yeah.
And you can see yourself saying the lines and acting it, but it's your face generated over, Luke Skywalker's body.
Yeah.
And that's interesting. That's an interesting play by OpenAI.
It will be interesting there. I think that there's a lot to be determined in regards to intellectual property in the age of AI, because you presently cannot prompt it multiple times in a row and get the same output.
Right.
And so if you're talking about content generation, what does that really mean in regards to the intellectual property of the output of those models if you cannot consistently with the same prompt get the same outcome? Do I still own the rights if it was a fluke that I created some sort of fan fiction in the first place? Who owns it? Lawyers are going to get paid a lot of money in order to figure that out.
Well, we know the internet's been flooded with a lot of AI slop, and it's annoying to watch, right?
Yeah.
And OpenAI even tried to create a social media platform based on AI video generation, which is Sora. And I think Sora is great in terms of being able to make content, but it's not good in terms of being a social media platform because nobody wants that.
What about Nano Banana? I mean, Google has YouTube and a massive content farm that they can train it off of. So they have a inherent advantage. I mean, the reason when you look at many of the different models are starting to concentrate themselves around where their competitive advantage is. And so Grok is very good at current events because of X. And so they have a natural training database of where they can go. Google has so much advantage because of the search for one, because of YouTube, because they just have so many access points through training data and content that they're able to improve those models. OpenAI, on the other hand, has to go out and acquire a lot of that, or say, "Oops, sorry guys," after the fact, or settle lawsuits and whatever they're going to end up having to do. So there is gonna be a reckoning in regards to those training sets. That's why many of them are starting to get now into synthetic data and all of these other creative ways that they're using in order to train.
Yeah, I mean, it's tough, right? Because a lot of the data is human generated, and a lot of the data is also slop. It's people just talking shit on the internet. And we're training these AI models. So I guess the question is, how do you filter out the good data from the bad data? And that's kind of what that company that Facebook acquired was doing, right? What was it? The one by that kid? The Asian kid from New Mexico, now he's in charge of AI.
Scale AI, I think.
Scale AI, yeah. So their job was essentially to try and decipher what's good data and what's bad data. All right. Getting back, we were just talking about what are the next super companies of the future, which, we didn't really come to any conclusions.
We didn't really name any names or anything.
But okay. But let's talk unicorns, right? So we haven't seen many unicorns come out of Southeast Asia.
Not many, and I'd argue that some of the ones that exist are no longer.
So why do you think that is, and are we going to see another grab?
Yeah, so I think the challenge that this region faces is a TAM question, because we need to keep it in context of the economic stage of development.
For those of you that don't know, TAM is total addressable market. Okay.
So we need to keep it in context of that sort of consideration. And so there are some markets that are big enough within the regional economies that have the frequency, etc. And you can tap into those. But I think where a lot of the companies have faltered is that they haven't thought big enough. Too many times when you go around the region, they're too focused on becoming local champions. They have too much trouble expanding beyond their borders. Expanding consumer is very hard cross market. I personally believe that B2B is easier because value proposition of businesses doesn't change. Consumer tastes will vary based upon culture, language, many different characteristics: city, urban, suburban, rural, etc. Businesses are basically much the same. The go-to-market is much more nuanced based upon all of that, but the messaging and the value proposition stays the same. I think a lot of companies have been too content or too slow in kind of going out and acquiring the market. I do think as well that I'm not necessarily a huge fan of trying to use the term of evaluation metric as the goal. I think we should be looking more in regards to creating meaningful revenue, profitable revenue generating companies. Because where we're at right now, I think that we need to start layering up from the bottom of success stories. Because when the cash flooded from the mid 2010s to until the bubble popped and the music stopped, cash just basically flooded in, and we all of a sudden started seeing a bunch of companies minted as unicorns. Some of them are justified in regards to the amount of revenue and the operating cash flow that they're able to generate, and many of them are not. So many of them, if they went back to market, if they haven't already been going through financial difficulties, I don't think that many of them would actually get that same. What I want to see is more companies that are generating meaningful amount of revenue. And I think that we need to start layering up success stories from the beginning of being able to call out and say, we've got these companies that are doing 10 to 50 million in revenue. 10 to 50 million in revenue is a very sizable organization. 10 to 50 in US dollar terms. That's a sizable organization.
I mean, that's still considered a small business, though.
It's a small business, but that's a meaningful amount of revenue. You don't have to acquire so many customers in order to get up to that point. Generally speaking, the rule of thumb for crossing the revenue mark to cross into unicorn territory was 100 million in revenue. And so if we can get closer to that sort of like 10% to 50% mark, if we get enough of those stories, we start getting closer to finding the ultimate goal of finding those 100 million companies.
Yeah, I mean, it's interesting. So it seems that what's constricting to Southeast Asian companies to becoming global giants is that they start in a very small market, and the regional market is very fragmented. So it's difficult to expand into those regions, and those are also small markets within themselves, right? So, I mean, what could be a very interesting strategy here would be to start in your market, in your local market, fine-tune your business, and then rather than trying to expand regionally to Thailand or Indonesia or Taiwan, you go to China or you go to India or you go to the US. You go to a big market that's mature and you adapt your business to that model. And therefore, then once that model is making huge money, you can bring it back to Southeast Asia and to the region. So, I mean, you've seen that kind of happen with a couple of, a very few, but like, what is it, C? C is a huge company that's public in the United States. That's owned by Malaysian, right?
Or it's a
now Singaporean
company. Yeah. If memory serves, it's a Chinese national that moved to Singapore.
Okay.
And started it. I'm not sure his co-founders, but it is quite sizable. I mean, they started off in gaming space, and then they launched Shopee, which is the dominant e-commerce player across Southeast Asia. They've entered Latin America. I'm not sure how that's been going as of late. They entered Europe, but there are. Within my own portfolio, there's a number of examples of companies that build here in Southeast Asia and enter Western markets, because we can play a labor arbitrage based upon the cost to build here, and then sell in the U.S. or Europe.
Yeah.
We have a number of examples of companies. The market is quite big there. I do still think that there's market opportunity here, but it's oftentimes the larger corporates and the multinationals that are operating around here. You can get a good comfort base. The challenge on going into the US, unless you're like a bottoms up style play, which is more of like go after the prosumer, so like going after the individual with a small sort of like $50, $200 a month sort of strategy, and then trying to ladder up to single player, to multiplayer, to team, to enterprise, and kind of doing that product-led growth strategy. But if you're more of like a straight-in enterprise, 50K a year, 200K a year, that style of business, you need more of a presence in those markets. And I think where a lot of folks hesitate is if you're going to build up a sales team in the US, they're expensive.
Yeah.
You know, they're not cheap. Getting a proper enterprise salesperson is not cheap. Now we have an advantage today because we can do a lot of things enabled with AI. You have more ability to have AI SDRs. I don't think you can actually replace the account executives. There's still that sort of personal touch associated with it. But we have a lot more capability that can give us more efficiencies out of those teams. But another thing that I'll mention on why there's a challenge on broader expansion is because you can build a nice, comfortable existence by still remaining small. Because if you build a company that's doing, say, $5 million in revenue, and you're kicking yourself off, say, 500K in personal income to that founder, in a country like Malaysia or Thailand or Philippines, I mean, even in Singapore, you could live pretty comfortably, but you automatically fall into the top percentiles of those countries, and you become very comfortable. And comfort is the enemy of motivation, because it's that discomfort, it's that ambition, it's that drive that pushes you to always want more. But if you become too comfortable, you start getting into the, I don't want to rock the boat. I don't want to kill what I already have.
Right. Okay, so getting back to the core of the question, are there any companies out there now that exist that you think could be the next Grab or the next unicorn?
We have a number of companies in our portfolio that I think can be 100 million revenue companies. Certainly so.
Want to name some names? What they do? What's their business?
Yeah. So I mean, we have one that's doing factory automation. So they basically can tap into the CCTV cameras, use image recognition technology in order to be able to automate any of the monitoring, prevention, health, safety, many different potential use cases. They're already dealing with Fortune 100, Fortune 50 top companies globally. They're in the Western Hemisphere. They're in Europe. They're in China.
So this is like a security company, a company that's kind of like a great tool for security.
They're good for the security. They're good for health and safety. Health and safety is really one of the big concerns.
Okay.
Workplace injuries. There's also a lot of like compliance. So if you're a chemical company, you need to make sure that you're monitoring and tracking across all of the chain of events. You need to make sure that there's always the protective equipment that people are wearing, the gloves, the face mask, where are people located at within. So all the movement of people within those manufacturing warehouses, etc. There's a lot of things
so safety,
that need to be. I mean, historically, you always had a guy with a clipboard walking around, inspecting stuff.
Right.
You don't really need that because you have 24/7 eyes that can do all of that. And you can actually, for a large organization that has factories across the globe, you can have a single source merging all of that information from across the portfolio so that corporate actually has much better visibility into what's going on.
That's really interesting. Really interesting. Right. I mean, the technology itself is very interesting because not only is it a facial recognition, it can tell if you're not wearing gloves.
Yeah.
Right? I mean, that's surveillance tech.
Yeah.
That's like something coming straight out of Chinese government, technology labs.
I mean, there's also the aspect of like, is this person authorized to be in this part of the factory?
Right. Wow.
Like many places have restricted access.
I mean, it's a little bit,
Big brother?
draconian, big brother, yeah.
But I mean, you're checking into a job the same way like office buildings have facial recognition going into many office buildings these days.
Yeah.
That's also quite similar in regards to safety, security of the building.
No, I don't mean it that way. I mean, you hear these nightmare stories about Amazon drivers, being videoed, having to like urinate in a bottle so that they can make their next delivery on time. I mean, it sounds like nanny state stuff also, right?
I mean, that some of those examples are them trying to like squeeze the KPIs and the expectations out of people.
Yeah.
So that's slightly different than where I would put this in regards to making sure that the jobs are functioning well.
Right. So then what happens when you start getting humanoid robots into those factories?
Well, you also want like the check and balance as well. So you'll have the same cameras can end up being tied to those devices to where you can have like automatic kill switches. So that if something's going awry with one of the robots or if there's a malfunction, you also have that kill switch. So you have a second layer of check and balance.
Or you could even just tap into the robot's camera feed and see his view and see what he's seeing. Exactly. Wow, that's wild. That's God mode.
Yeah. There's a lot of possibility with that of where stack ended up going.
Okay.
And an incredibly smart company.
Okay. We've got the factory, automated factory, security camera software. What else?
AI procurement tech is another one. I think the area for procurement for a lot of companies is still quite antiquated.
Okay.
This is a company out of the Philippines that's moving into the US pretty heavily. That's an area where there's a lot of pain points across the process of procurement for
So
a
is
lot
that
of
an
businesses.
agent?
To an extent, there's a lot of agentic nature to it. But if you think about like the process flow of procurement, you go from like a request for proposal or a request for quotation, finding the most appropriate one, because especially if you start talking about larger lot sizes, etc., there's a lot of process in that in between of the sourcing, the negotiating, all the way down through the fulfillment, the invoicing, the payment, working capital, financing. There's a lot of layers across that chain, and it's very antiquated. And a lot of the existing ERPs are not addressing that. So if you look at the stack in enterprise, procurement is a pretty open space that is not very well addressed.
Really? That's a really good space to look into too, because procurement, I feel like that's one of the segments of business that's most open to bribery and like kickbacks as well.
Especially
in Southeast Asia.
Emerging markets.
Yeah.
Which is going to be a resistance factor in regards to people adopting it.
Yeah, you're going to be taking away their rice bowl. You don't want to do that.
Yeah, exactly. But there's also the aspect from the business owner standpoint of it brings transparency into it. With e-invoicing that's going on here, it can function directly into that. So there is inevitably going to be the trend line moving away from that. So over the long run, those sort of activities will become harder and harder.
So you've traveled 150,000 miles this year around the region looking for businesses. Where are you seeing the most innovation? Which region are you seeing the most innovation coming out of?
So the priority markets that I go to in Southeast Asia are really Malaysia, Thailand, and Philippines. If I look across those three markets, Philippines has probably been producing the most amount of volume in my pipeline. Thailand has been producing a lower amount of volume, but the higher percentage of that has been going into further evaluation. So lower volume, but slightly higher on quality because the percent that gets deeper evaluation is higher. Malaysia is a very high potential market, but it's been very slow from a deal pipeline standpoint. So we haven't really gone deep with very many companies here.
What do you think the problem is with that? Why is Malaysia lacking in terms of startup productivity?
I mean, there's a number of causal factors. I mean, overall, the region overall has slowed down. So many will just point the finger and say it's general macro factors that are affecting it. That I don't necessarily buy into that because most of the decline has been centered on Indonesia as they've been going through a very rough period and they made up a very outsized percentage of the regional ecosystem. I think that there's a combination of factor in regards to there's a very high comfort here. So the willingness in order to risk it with an endeavor like a startup is a little bit lower. I think that there's a lot of bad advice that goes into the startup ecosystem that has been steering people in the wrong direction. And I think that a lot of the high talent leaves.
Where's the bad advice coming from?
Different organizations. Some of the organizations that are supposed to be aiding and helping the startup community, both government and non-government.
So you think that essentially it sounds like boiling down to an ecosystem problem?
There is an ecosystem problem, I believe. It's still, in my mind, the highest potential market because a lot of the enabling characteristics are all there, especially in B2B where we have a very high amount of multinationals, regional large corporates. They are leveraging Malaysia because of its geographic center, because of its access to workforce, because of a number of characteristics that make it a good destination as a regional hub. So we have an inbuilt customer base. What we're lacking is that startup community to actually take advantage of it.
So what can be done to improve the Malaysian startup ecosystem?
So that therein lies the challenge, because by going in and saying, hey, I'm going to do ecosystem development, there's already a lot of noise in the market. So the challenge is being able to distinguish yourself as a clearer signal in a market that is flush with noise. So there's basically the needle in haystack challenge of being able to actually find enough operating room to not get flooded out, which is one of the key challenges. It's hard for an independent player to actually make a positive difference because they get pushed to the side. The other aspect is there is a long-term need in order to improve technical education across the board. Every country has that necessity, so it's not necessarily unique to here, but there's a long-term shortage of technical talents everywhere that you look. Here, I think it's a little bit more pronounced, but we do have talents. Then, when you look at the capital funding market, I think that we need to do a better job of enabling more access to capital. And I don't necessarily say that because we already have crowdfunding. There's no shortage of capital in the market. But I think that there's a need in order to educate the market on investing in startups, because many times I've seen this play out over and over again. An angel investor comes in, maybe titled, maybe not titled, but it's a high net worth individual, and the expectation set is unrealistic relative to building a startup. You're not going to be able to pull out dividends in a short-term time period. You're not going to see that company paying you current income. It's a long-term horizon. You're not going to be able to just make one bet and expect I did my startup investing. One bet, you're most likely going to lose money. Generally speaking, the stereotypical advice on angel investing is you need a portfolio of 30 companies. Most angels do not do that. What happens more often than not is that they come in with the wrong set, with the wrong strategy. It doesn't work out, and they in their circle of golf buddies are talking about how bad it is to invest in startups. And next thing you know, you create a little bit of contagion around that. So we need to reset the mindset of a lot of these folks.
It's kind of an old school mindset, right? Almost a brick and mortar mindset.
I mean, if we were building real estate and new project developments, I think those would end up going quite well. But the technology side is still new. So I always think about things in regards to what are the precedent layers in order to accomplish the end goal. We need to come back to the first principle in regards to thinking the plan of a step 1, step 2, step 3. I think historically, when I look at the steps that have taken here, it frequently is starting with step 3 and ignoring the foundational 1 and 2. And ultimately, it doesn't end up working out. I think here we need to be able to find pathways to actually get products sold into many of these companies, because I think if a lot of these high net worth individuals are seeing the value in their operating businesses, they become more open to the idea that there's value that remains untapped that they can actually invest further into. We do also need to break the mentality of the build versus buy, because inherently a lot of folks have that sort of wanting full ownership. But not all problems are scale enough for that to exist under the umbrella of the conglomerate. You need to have that freedom of leverage. You need to have that freedom of a startup to be able to innovate, and it can't die under the corporate umbrella.
Okay. Makes sense. So a lot of work to be done in the Malaysian ecosystem.
Very high potential, but many of the other markets around also have similar issues. It's just more pronounced because the expectation set for Malaysia should rightfully be higher than many of the other markets, because the potential in my mind is higher.
Okay.
It should be a Singapore version too.
Well, that leads me to my next question. One of the most successful startups in Malaysian history is Grab, which is now a Singaporean-based company. Now, why do a lot of Malaysian-based companies move their headquarters to Singapore? Is it easier to do business there?
So that instance, the investor said, "You have to move. You want my money, you have to move." And that's a common thing if you're going to take Singapore government money, is they oftentimes say you have to move, because that's they're leveraging their economic power from their sovereign fund in order to bring more economic activity inside their borders. Makes perfect rational sense. I think inevitably most companies, regardless of which country around Southeast Asia, they always put a holding company in Singapore or a topco, or many people use different phrasings for it, but essentially it's the corporate entity that sits at the top that's registered in Singapore. And that's the entity that people will raise capital from. And so oftentimes when you see, and there's a little bit of fuzziness when you see statistics on fundraising, because it will show that Singapore has 85% of funding. Okay, but is that just where the holding companies are? Because almost every company, if they're raising any meaningful amount of money, is required to have a Singapore entity.
It's because the money comes from Singapore.
Not because the money comes from Singapore. It's because there's only a handful of globally recognized destinations for capital. And so it comes back to not just that the money is coming from there, comes back to the global familiarity as a center for capital with the regulatory, the legal, the tax, all of these environmental factors. Those are what dictate the jurisdiction requirements. If we think about the US, for example, the company that's operating in Silicon Valley, where is their company incorporated at?
Delaware.
Chances are Delaware. It's not incorporated primarily in California.
Right.
And why? Because the legal, regulatory, and tax environment of Delaware is favorable. And because of that, they set up the entity there. Now, sure, it's all within the same country, but there's a meaningful difference because of the way the taxes between states and legal environments between states, it happens that way. Now, if we extrapolate that out, the same happens on nation-to-nation scale as well, which is the same reason why Singapore ends up being that destination, because they have decades upon decades of predictability, reliability. It's a very sort of black and white legal, regulatory ecosystem. And because of that, they have an inbuilt trust factor over a long period of time. That's a strong competitive advantage that Singapore has that would be very hard for any other country to replicate. So if we take India, for an example, there was a time where the vast majority of companies out of India would incorporate in Singapore and they would still continue to operate in India. It was only after the ecosystem had developed quite large that the government started putting in more regulations that made it harder, because there was a lot of round tripping of capital and other ways that there was leakages and things that high net worth individuals were doing. But only after a certain amount of time did they try and push it for local incorporation to get rid of that holding company outside of the country. Because the size of the ecosystem and because of the domestic size of capital was sufficient, they were able to accomplish that to a certain extent. But none of the countries in Southeast Asia presently can, in my mind. So inherently, all of them are going to have the holdco in Singapore. The question then comes, are the founders going to relocate? And the question with that comes more to, is it a requirement of the capital provider? If you're going to take Singapore government money, chances are you're going to have to relocate there. If you're going to take Saudi money, they're going to tell you you have to put your regional headquarters in Saudi. If you're going to take government money from the UAE, they're going to tell you the same thing. You need to put your regional headquarters here. There's a strategy around that when you're tapping into certain pockets of money. So part of the reason comes, where's your money coming from? But you can set up your holdco in Singapore, operate from KL, and be perfectly fine. You just need to be good at fundraising and have funding providers that are not requiring that, which there are many.
Okay, fair enough. So you've talked about macro investing across the region. Does China ever loom over the environment? Are you seeing influxes of cash from China? How is China affecting the macro investing across Southeast Asia?
So it hasn't been as dramatic as many people have thought over time. I think a lot of the consumer segments are getting more impact. I mean, if you go down the street, I'm sure you're going to go by bubble tea locations that are now entering in from China. You're seeing more TikTok shop. You're starting to see much more on the consumer end of the spectrum. and that's accelerating. That seems to be accelerating in the post-Trump tariff world. That acceleration of expansion in Southeast Asia is increasing in pace. But outside of that, there was a long-held expectation that we would see a lot of the capital moving into the investment space, and it hasn't been as earth-moving as previously expected.
Okay.
There was also the expectation that you would see a lot of acquisitions coming from Chinese entities, and that also hasn't lived up to what the previous expectations were. It's still the elephant in the room is right next door. So it could at any moment become a much more powerful impact, whether from acquisition or funding.
Right.
But as of yet, it hasn't been so dramatic.
Okay, speaking of macroeconomics, now we've also got the strength of the Malaysian ringgit. Has that affected your business in any way, your strategy in investing? Because maybe the US dollar has decreased by 10% over the last 6 months or so?
Yeah, I mean, I invest in, I value companies and I invest in US dollars. So certainly those dollars do not go as far in Malaysia. But I haven't done a deal in Malaysia in a while. All my deals have been in Thailand and Philippines and outside of Malaysia. So I haven't done one here recently. The Philippine peso is weaker, so that one it's going further. Thailand is fairly controlled, so it hasn't changed a lot. So
Are
Malaysia's
Malaysian,
really the stand-up.
I mean, I know you're in B2B. Are Malaysians focusing more on consumer then also? Is that one of the reasons? Or are they also focusing on
A lot of the startup
B2B?
ecosystem is consumer.
Yeah.
A lot of the startup ecosystem across Southeast Asia is consumer. But that's a natural aspect because like if you look at any ecosystem, it generally always starts as consumer because it starts with what's familiar. And it starts with the precedent layers, to come back to that terminology, that you need the consumer tech of e-commerce, of the payment rails, of all of these different things before B2B really comes in. Because if you don't have the growth in the consumer side, are you having the demand on the logistics, the manufacturing, all of this that is requiring the increase in the efficiency of the traditional industries that are servicing all of those consumer goods?
Interesting. Okay. Now from your side, what do you look at in a founder? When you're looking to invest, what are you looking for?
So that's a difficult one because our investment theses are built around the 3 Ps, which is the people, the process, and the product, in that order of importance. So like the people are very much first. And again, coming back to what I said earlier of the first wave of AI, I wasn't buying into the vision, which is very much of a, not necessarily that the founders are bad, but I didn't feel like they had the vision on what they were expecting from the future, or at least conveying it to me. And so with founders themselves, I'm trying to see whether or not they have the growth mindset, whether or not they have that strength of conviction, but still having the malleability that when the facts change, they change their mind, so that they have that sort of flexibility, because it's not a straight line. So they have to have this ability to be able to think fast, iterate fast, and keep on moving. And there's also the aspect of comfort, because they need that resilience. They need to be able to understand that it is not easy, because if it was easy, everyone would do it. And the only things that are worth doing are things that are hard. So they need to have that inherent resilience. So sometimes we're just looking for like a chip on the shoulder, or the wall again, the back against the wall sort of person that has the skill set, has the vision, has the ambition, has the drive, and can actually fulfill that. Because ultimately, when we're trying to analyze the person, we're trying to really assess the execution risk, because that's the key factor. We're coming in super early. They're just launching their product. It's just come into market. Are they going to be able to go from 0 to 1 and from 1 to 10?
Okay. So what are some red flags that you may not have seen in the past that you've learned from and that now you do see?
Yeah.
Not only with the person, but also with the business.
So I don't make fast decisions with people. So I don't pride myself on making fast investment decisions. I get to know people over a period of time. And in that period of time, oftentimes we're having conversations about the business. I'm giving my opinion, sometimes advice, sometimes perspective. Any form of defensiveness to me is a red flag, because defensiveness indicates a rigidity. And rigidity is not what I was saying about the flexibility to hear points of view, you can have strong conviction, but you can't be defensive because you're not always going to be right. You're making a prediction about the direction of the market. You can have a strong belief about it. I'm not an expert. I'm just giving my perception.
Yeah.
If that happens with a customer, is that person going to react the same way?
Yeah, there's a great quote by Jeff Bezos that says you have to be very clear on your vision, but you have to be flexible in how it gets executed.
Yeah, exactly. And customer centricity is paramount. So like ultimately, like building a startup is not intended to be complicated. You have to delight customers first and foremost, because they're the ones that are paying. If they're not delighted, they're not paying.
Okay. So in terms of the business side, you look at customers. So what's a red flag is if customers are not happy?
Yeah, so that's a tough one to see with the stage that we come in,
Right.
because oftentimes the data isn't sufficient or it's not reliable. Because what happens with early stage is that oftentimes they do like friends and family as the first people that are using it, or they go within their close network of, I know this person whose uncle has this business, I'll try and sell it. These sort of things, to where it's not truly representative of a go-to-market strategy, and the use cases are oftentimes not truly representative of what it may end up being. So there's a little bit of like clearing that out. But the red flag for me is not necessarily in the traction data per se. It's on the individual. So anything, as I said, like on the defensiveness, but as well, like if a person cannot explain their vision, not everyone is an extrovert, not everyone is good with words, but if you're a founder, you have to be able to rally the troops. Like it's hard to be the soft-spoken, introverted person that is not like the personality within the organization. They need somebody like that.
Yeah.
Because you have to inspire people to work at wages that are below market. The startups are paying people below market, and the only way that you can accomplish that is by like rallying the troops around the mission and the vision, and getting that inspirational factor of, you're getting a seat on a rocket ship. Maybe not today, but tomorrow you will be much happier that you took that short-term sacrifice.
This is very true. And if you can't do that, then I suggest you getting a co-founder that can do that, and vice versa.
Yeah. Another red flag is when co-founders have too short of working relationship or have just met each other. Oftentimes that does not work out. And I oftentimes liken co-founder relationships to marriages.
Yeah.
There's a high failure rate. And like they oftentimes will be correlated to high stress environments. So if you to use the marriage analogy, they oftentimes come into higher stress and higher rates of divorce when there's money problems or kid problems, because those are both high stress circumstances. With startups, every day is high stress because you're constantly trying to figure things out. It's a very high stress, high pressure. Heavy is the head that wears the crown, especially as you start hiring staff. They're all depending on you, and it's high stress. So co-founder conflict, we're always trying to see whether or not that is a functioning relationship.
Okay, let's turn that around, and let's say I'm a founder and I'm looking for VCs. What are some of the red flags that I want to look for in VCs?
Any VC that acts like he knows it all, because they don't. Any VC that is giving directives as opposed to opinions, because they're not running the business. They're putting capital in. And I distinguish this later stage when you're more growth stage. It's a different categorization. So all of what I'm saying is related to the early stage.
Like seed funding.
Yeah. Seed and probably like pre-seed, seed, and A are probably all kind of fall into similar. A starts being a little bit different because you've got more traction, track record, etc. But anybody that ends up trying to take up too much control, or lack of empathy, because it's hard. The VC is not the star of the show, and I find that out here the power dynamic has a tendency of inflating the heads of the VC side of the table, but they're not the ones that are the creators. They're playing a small part of the role.
Yeah, they're allocators.
They're allocators, and what happens as well is that they're pushing the junior staff out who've never done anything. And there's some great people, don't get me wrong, but there's a handful out there that are inflating the power dynamic a little bit too much.
Okay, so that's in terms of VC personality and management style, but what about when it comes to funding? Are there any lies that founders are told about VC funding, or any red flags that founders have to look out for when it comes to funding, maybe being taken advantage of?
Yeah. Every VC claims to add value. Not very many do. So every single one of them is going to tell you what they can do for you. I can introduce you to these customers. I can connect you into this network. I can do all of these different things. Never take it on face value. Talk to some of the other portfolio companies that they have in order to validate it. Verify whether or not the reality meets the promise. Because I mean, they're trying to win a deal. Like if it's a hot deal, they're gonna try and win it over, and it's gonna become more of like the politicians say anything. And so you can trust but validate. So that's a key thing. Oftentimes people overpromise and underdeliver on the VC side. Sometimes trying to go for excess amount of ownership or control too early. So if a company is very early, there's rule of thumbs in regards to the amount of dilution that is acceptable. If you fall outside of that range, it can damage the possibility of being able to raise subsequent rounds of funding.
What is the range?
Seed stage, you're probably, by the time you're past your seed stage, you're probably diluted by, say, 20%, maybe 25 at most. So where the founders still retain control. After an A round is probably going to dilute you 15 to 20%. Founders still have control. B round is probably going to dilute you probably 10 to 15%. Founders still have mostly control, but somewhere hovering around that 50% marker. And then it just dilutes from there. But the worrying part is when founders don't have majority, because they're the ones that are taking the operating risk. They're the ones that are pumping life and soul. And so if they're not adequately incentivized, there's the question mark of whether or not they'll still they're willing to put up with it.
Okay. All right, personal question. If you were 25 in this region, what business would you be building?
If I was 25 and building in this region, I would be in the tech space, building something in the B2B space. What that is probably depends upon how crazy of a 25-year-old I am and how crazy ambitious I want to be, and how good my safety net is.
Okay.
If I had a good safety net, I'd probably swing for the fences.
Right.
If I just needed to make sure that I had a cash cow, I'd probably start with something that's cash generating and then move on to something that can fulfill the bigger ambition.
True. Good strategy. Spoken like a seasoned investor. So being somebody who's invested in dozens of companies across the region, what advice do you have for entrepreneurs who want to start a business, entrepreneurs who are in the early stages of business, just looking for VC funding? What advice would you give them?
Many people will sit on the sidelines waiting for the right moment. There's never a right moment. Many people want to validate to make sure that it's going to work before they get involved. You never know if it's going to work until you start doing it. So if you're thinking about being an entrepreneur, you just have to start. If you don't start, you're not an entrepreneur. Just get back to the day job. If you want to be an entrepreneur, you just have to start.
Okay, and what about those who are already entrepreneurs and who are looking for VC funding?
If you're looking for VC funding, you need to verify that you're actually in a position of power to go out and look for it, because you want to be funding for growth, not for survival. If you're funding for survival, the power is not in your favor, and you may end up getting a bad deal or no funding at all. So first thing first is to work on the mechanics of the business, so it puts you in a position where you're funding for growth, not survival.
Okay. Well said. Kevin Brockland, thank you very much.
Yeah, thank you.
And everybody can find you where? At Indelible Ventures,
Indelible
right?
Ventures. You can find me on LinkedIn. I'm super active there as well, giving my 2 cents on a regular basis.
All right, good. Let's go. Thank you very much.
Thank you.